Hello students and welcome back. Today's class is the continuation of the cash flow statement chapter of class 12 commerce accountancy syllabus. In the last class I have explained you what cash flow statement is all about. It was an introductory class of cash flow statement. In that class I have told you that cash flow consists of three different types of activities. Cash flow consists of three different types of activities: operating activities, investing activities, and financing activities. I repeat, operating activities, investing activities, and financing activities. Today I will explain to you these three activities one by one elaborately. So please pay attention. Now first we will talk about this operating activity. Operating activity is a revenue producing activity. All the cash that are received from the sale of stock of goods or the cash that is obtained by rendering services or the cash received from the royalties, fees, commission and other preliminary expenses, or the cash that are received from debtors, the cash which are paid to the suppliers, all these cash receipts and payments are the main part of these operating activities. So operating activities consist of cash received from stock, sale of stock, or debtors, or bills receivable, which in short form we write BR, or from preliminary expenses, or cash paid to creditors and suppliers, So this is what operating activities is all about, all the cash receipts and all the cash payments. Now we come to the investing activities. This is the second part of cash flow statement. While preparing cash flow statement, this is the second part that we will get. Investing activities is concerned with the cash payments that are required to make while acquiring any kind of investment or fixed asset, including intangibles, or the cash received from the disposal of fixed assets. So either cash payment to acquire the fixed asset or cash received from the disposal of fixed asset. So cash payment to acquire fixed asset or cash received from disposal, means disposal of asset, that is sale of asset. So this is all about investing activities. Now we come to financing activities. This is the third part of the cash flow statement. What is this financing activities all about? This is all about the cash received from issuing of shares or debentures, and also cash made or cash paid for repayment of kind of loan or payment of dividend or payment of interest. So these are the three categories of activities: operating activities, investing activities and financing activities. These are the different items that come under these three categories. These are the items that are included in while preparing cash flow statement. Now cash flow statement is prepared under cash basis. Accrual basis is not a part of this cash flow statement. Here arises another statement which is called fund flow statement, which is just the opposite of this cash flow statement. Fund flow statement is all about preparing the working capital. It shows the changes in the working capital and it is prepared according to accrual basis. So these are the few differences between cash flow statement and fund flow statement. Cash flow statement is a part of our syllabus while fund flow statement is not. But we need to know the difference between these two statements. Cash flow statement shows the effect on cash in the operating activities, financing activities and investing activities, while fund flow statement shows the changes in the working capital. And also cash flow is concerned with cash, whereas fund flow is concerned with the working capital. Cash flow is also required for short-term planning, whereas this fund flow is required for long-term planning. And this cash flow statement shows the cash generated from different operations, whereas fund flow shows the fund that is generated from different operations. So these are the basic differences of cash flow and fund flow, whose notes I will provide you later on. Now we come to the preparation of this cash flow statement, which I am going to start in my next class. We will follow the indirect method of preparation of cash flow statement. Remember, indirect method, because that is required for our syllabus. Direct method is not required. In case of preparing the cash flow statement, what we first require is the net profit before taxation from the PL and balance sheet of an enterprise. So by employing the profit that is obtained from the PL and balance sheet of an enterprise, from that profit we will start preparing the cash flow statement. Now the starting point of this cash flow statement is this net profit, and after that certain adjustment will be made, like depreciation, sale on fixed asset or amortization of goodwill. After that these three activities will come one by one: operating, investing and financing. And thus we will prepare the cash flow statement in our next class, in the next segment of this chapter. So this is all about the three different activities of cash flow. I hope you have understood these three different activities. In my next class I am going to start the sums, one of the sums, and how to prepare this. We will show how to prepare this operating activity. What are the items to be included in operating activities? First we will learn this part of the chapter, operating activities, in my next class, and then I'll followed by the other activities like investing and financing. So today's class is up till this. I hope you have all understood the three activities that I have explained. Follow the next classes to see the sums based on cash from operation or operating activities. So today up till this, goodbye.